What's up, guys? It's Matt here for another episode of Whiteboard Weekly. Today we're going through the real estate professional's salary or the entrepreneur's salary. What should it be? What should I be paying myself on a monthly basis? Talk to a lot of real estate professionals all the time, and I think a big thing that lacks is the amount of agents that don't necessarily treat their business like a business. You are a business owner, and are you treating your business as a whole separate unit than yourself? Because that's what it is. It should be something standalone, living, breathing, just like yourself. And how are you treating that? How are you developing that separate entity? And so we're going to be going through this because I think it's an important subject, especially with times like today with the pandemic. How are we properly planning, not personally, but for our businesses too, for instances like this? Do we have enough cash and reserves to get us through times like these? And a lot of that is going through saving strategy and so forth. So this isn't going to be a long video. I am, to preface to say, no tax expert whatsoever. I have a separate person for that. But I do want to give you some quick kind of highlights on what I think can be very helpful for the real estate professional to really determine what should be incoming on a daily basis, or on a monthly basis, from my business to me personally. It's extraordinarily thrilling, right? To work for money yourself as an entrepreneur, be able to provide your service to somebody and receive something in return, in this case money, right? And now the most important part, I'll tell you what, it's very easy to make money. It really is. I think the challenge is holding on to that money. And that's where you really have to dedicate time, energy, and self-discipline in order to make sure that you're doing the right things with the money that you do make. So let's go through it. The first thing that, I see this kind of being, 4 different steps or 4 different areas that I want to highlight. But I want you guys to think about, your business again, as a separate entity than you, as a real estate professional. You're here, your business is over there. It's its own living, breathing thing, right? And how is that thing that you've built, that you're managing, how is it paying you? How is it paying you? Okay? And so, I want you to put that thing into perspective. So you slowly come around to the flow of these different areas that we're gonna dive into. Again, you're here, your business is over there, and how is that thing over there paying you, putting money in your pocket? Okay. Again, treating your business like a business. You are a business owner. You're wearing many different hats. Okay. So the first thing we want to cover is our, what we call our operating expenses, right? Our operating expenses. So operating expenses, knowing this, okay, is going to, that's going to be the first thing that we need to cover, right? So money comes in the door into our business, into that thing over there. Operating expenses, entrepreneurs in general, this could be things like, again, rent, utilities, and so forth. Real estate professionals, you have a lot of different things. What's the cost of being in business? Your RAIN dues, for instance, or your MLS dues, realtor dues, things like that. So operating expenses, and what we want to make sure, what we're trying to do is figure out what our net income is going to be. Okay, our net income. And most of us know what that is, but just for those, so we can clarify some things, because I do see the terminology sometimes get confused. So in order to determine that, I'll put it into a different color here. Our net is going to be our gross revenue. Okay, gross revenue minus, minus our expenses. Okay, equals our net income. Okay, so again, the first thing we want we want to make sure that that thing over there is covering is our operating expenses. Okay, we need to know what our net income is. Okay, net income is not to be confused with our gross revenue. Just because you make a $5,000 commission check does not equate that, you cannot equate that to your net income. There's going to be expenses that are paid out of that, from our gross revenue that comes in minus our expenses, gets us to our net income. So things, again, maybe fees or things that deal with your brokerage that come off the top, you have to think about, to figure out what our operating expenses are, okay? So that's the first step. The first step is we need to figure out what is our net income, okay? We need to cover our operating expenses, all right? By knowing that, that'll lead us to that number, all right? The second thing, all right, and this is the non-negotiable one too, right, is not every dollar that you make, unfortunately, you can't keep, okay? I learned that when I got my first check. I think I was 15 and a half or 16, and I saw the line item there, money going out to somewhere else, Uncle Sam, okay? And I asked Mom and Dad, well, this is my money. Why is it, what's going on here? And there's where I first learned about taxes, okay? So this is the scary story. I hear so many agents, and the data just shows it, that are working for a good half of the next year just to pay for the prior year's taxes, okay? So you have to get in the mentality. Again, you have your thing over there, which is your business. It's living, it's breathing. And then you have yourself over here that's reliant on the money that's producing to come in your pocket. But unfortunately, not every single dollar that thing over there makes, you're able to keep. So you have to get in the habit as a real estate professional, as an entrepreneur, to save for your taxes, okay? Tax savings, that's the first thing. The second thing, tax savings. All right, and again, like I said, I am no accountant. I hate numbers. That is not me, but that's something that every single person that's in business for themselves needs to know, okay? You are not able to keep every dollar that comes in the door. It's as simple as that. So you want to save. Okay, let me erase this over here. Now, as a new business, this percentage, again, I would highly advise you guys to talk to an accountant in regards to this. I always I put this out there as far as saving approximately 30%, okay? 30%, especially maybe as a new business, okay? I think you're in a safe area there to save 30%. So every dollar that comes in the door, okay, 30% of that is being put off to the side for tax savings purposes, okay? So again, let's go back to the example, all right? Or let's say that you made, we figured out in the first step what our net income was. Our net income was 100K, okay? 100K, that was our net income. So again, after expenses were paid and all that. All right, so we have 100K net income. Tax savings, step number 2, is going to be 30%, okay? So 30%, which basic math, because I like basic math, I'm the math whiz, is $30,000, okay? So out of 100,000 that you made, all right, 30% of that, okay, needs to go over here, okay, to our tax savings, all right? So again, ultimately our goal here is we're trying to figure out what we're paying ourselves on a monthly basis. And again, step 1, we figured out first what our operating expenses were, okay, our gross revenue minus our expenses, okay, and then we were able to get to our net income being 100,000 in this case, okay, and just a rule of thumb that just consulting with other people in the business, 30% has always been a good number to start with, okay. But again, advise, talk to one of your tax accountants. I know a great one, so PM me if you need that information. But again, 100,000 in the door, it's not all yours to keep. You want to set aside 30% to go into your tax savings plan. So that brings us to I like to use the term owner access number, okay? Owner access number, okay? And what our owner access number, which basically means, as it says, us as an owner of our business, that thing over there, an entrepreneur, we have access to 70,000. Okay, at this point, 70,000 is what we have access. That's our OAN, our owner access number. The amount of money that our business has that we have access to. Okay? So again, 100,000, we're saving 30% of that. That's got to come off because it's got to go into step 2 here, tax savings, leaving us, our business, with 70,000 that ourselves that we have access to take from the account. All right. So at that point, 70,000. Again, owner access number is a definition that I'm gonna refer to a couple times here. So let's erase that stuff. All right. Unfortunately, we're not done yet. Okay. Step 3. Put it right here. Step 3. All right, is going to be our business debt. Okay? All right, so we've covered our operating expenses off that commission check. Okay? We've covered our tax savings or our taxes off that commission check. All right? That leaves us to produce our owner access number. Okay? And then we got down now to step number 3, which is our business debt, okay? So some of us might be a little smarter than others, right? Or a bit more conservative, and you don't have a whole lot of debt, and that's fine. I'm not saying all debt is bad. There's strategic debt, and I think numbers that, opportunities that are out there that you're going in for. In the long term, it should pay off. But I think all of us have some form of business debt, some form of personal debt, okay? There's good debt, there's bad debt. All right, but in this case, again, business debt is what we want to cover. Step number 3. So we're going to look at our business plan or our business numbers and figure out, is there any debt that we have to pay off for the business? Okay. So operating expenses, tax savings, business debt, and then the 4th and final number that I like to and let me. And again, back to this, all we're doing, once we have our owner access number of 70,000 that we showed in the previous step, once you guys come up with your business debt number, okay, we're just going to subtract it from that owner access number. All right, so let's say that you have $10,000 in business debt, then that's dropping our number now down to 60,000. Okay, basic math. The 4th step is going to be, and this is a big one that I see a lot of people not think over, is our business savings. Okay, our business savings. Yeah, we have a lot of, personally speaking, savings is a big thing. I know a lot of people that save. That's great. Okay, personally, but what about your business? Again, we're 2 different entities. Is your business, your living, breathing thing over there, is that thing saving as well? Okay, and you might say, well, what is it saving for? All right, I'm taking the money that thing's paying me and I'm putting it in my personal savings, and that's fine. That's all part of this whole makeup and trying to figure out what our salary is going to be. But your business needs to save too. As in business, generally speaking, I mean, maybe new hires, product launches, things that you want to develop in the future. Locations, but as a realtor, you can maybe think about, maybe you're trying to save up for a personal assistant, right? A personal assistant. Maybe there is a great training event or national conference that you've always wanted to go to that costs $5,000. I don't know. Those are all things that you could be thinking about. That's your business savings that you want to prep for. So let's say that there's, business savings, and you sit down and you look at all the things that you want to eventually purchase. That's going to be part of your savings plan. You're going to sit down and let's say it comes to $12,000. All right, divide that by 12. It's $1,000. Okay, so $1,000. All right, $1,000 a month in order to save for $12,000 for that year is what you want to put towards your business savings, okay? And that $1,000 is just going to be deducted again from your owner access number. All right. So that's basically what we're getting down to. Now, once we come up with that, let's say that our owner access number ends up all said and done, $50K. I mean, the goal here, of course, is to make sure that our owner access number is higher, all right, than what we are paying ourselves, because then we'll have an amount there that we can decide, well, okay, I want to put more money into my business savings, or now maybe the last few months I've been paying all the bare minimums of my business credit cards. I want to up that, okay? Maybe you can put more away to taxes. So anyways, look at that. We always we're going for that owner access number to be higher than what we're pulling from the business. Now, pulling from the business, you have some personal decisions to make, okay? Because again, this is now figuring out, well, I have $50,000 here in owner access, all right? Now, what have I decided to pull from? Or the amount that you want to pull from. And this is where you have a lot to think about. You essentially have to ask the question of, what do I need my business to pay me? Okay, what do I need my business to pay me? All right, and I think there's 3 items in your personal lifestyle, your personal business that you have to think about. Okay, you have your fixed expenses. Okay, fixed being things like your mortgage or your rent, things that, again, the price does not, or the expense does not change month over month. All right, you have variable expenses that you have to figure out, okay? So things like groceries and all that stuff, it might kind of change month to month. And then you probably want to throw in your extra expenses, okay? Maybe your fun money, going out to eat, doing all that stuff, all right? So you need to figure out, and this isn't a budget planning video, a lot of this can be done by sitting down maybe with your financial person, or, honestly, there's so many free tools out there that you can get a sense for what your personal budget is. But you need to figure out what this all comes to and what that number comes to. Maybe after all said and done, you figure out your fixed, variable, and your extra expenses, and you need to be making $7,000 a month from your business, okay? $7,000 a month from your business after figuring all this out, okay? So again, commission check comes in the door. All right, commission check comes in the door. We got to cover our operating expenses. Okay, it hasn't hit our personal account yet. I would just assume you guys have a business account separate from your personal, or you should have, right? So your operating expenses are taken care of. Step number 2, that commission check has to put aside 30% for tax. Okay. Step number 3. Okay, and after step number 2, we've now figured out what our owner access number is at that point, right? But we have to trim it down with any business debt. No business debt, great. Move on to step number 4, okay? And you need to think about your business savings, okay? Maybe you're not saving for anything in business. Great. Okay, we're back up to here after the tax savings of the 30%, okay, and figuring out what our owner access number is. Now, if that owner access number in this case is $10K, okay, and you need your business to pay you $7,000, all right, then you're in good shape, right? You're in good shape. You have a difference here of $3,000, okay, that maybe you could now think about putting more into savings, like I said before, or paying off more debt. Or over here on the personal side, maybe there's things that you've been, as you've been developing and building your business, you've been having to put off for some time, okay? And now you can up it with that difference, okay? The other problem, okay, is going to be, what if, okay, you need to make $7,000, but now your owner access amount is $5K, okay? Then that's when we have a problem, right? there's the problem when your owner access amount, okay, what you need, or what you have available, and what you need is going to be higher than your owner access amount after all these deductions, okay? And that's where you're going to have to really sit down and finesse the numbers, okay? But the one thing you cannot play with or negotiate with yourself out of all these, of course, your tax savings, because that's what's going to get you in trouble. So just wanted to do this. I thought it was a good, quick little exercise. If you guys have any questions or anything, send me a message. I'm around, and be happy to walk you through any of this or what I even do on, with handling my businesses and myself personally. All right? Stay safe, guys.